Welcome back, everybody. We are here again for another video, and in today's video I'm going to be going over how I made $961.90 live trading to my Discord. This is going to be on a market maker buy model on NASDAQ. So let's hop right into the video and the trade breakdown. All right, like always, we're starting off with a blank chart, and I have the daily on the NASDAQ. Now, I want you to pause the video and see if what I have on my annotations will match yours on the next slide. So pause it before I show my results. Okay, so if you had the proper notations marked off, you would have seen the fact that we had a daily bearish fair value gap resting here that we closed off and violated on Monday's daily close. Now, what also happened at the close of that Monday? We have a short-term low here on the daily chart that gets violated by this specific down close candle. And if you guys already know something, what do I look for in regards to the forever model with executions? I want to execute on candles and specific candles that sweep liquidity and then close above. Now, this is a daily chart, so I'm obviously not executing on the daily. I'm utilizing this as a point of opportunity where I know price will be sensitive at. And you can see, since we closed above the opening price of this candle, I'm dragging it out in time because I know that wherever this is aligning with, if it's an intermediate term PD array, there will be sensitivity in this specific area. And based off of the fact that we have no more bearish PD arrays to use for sell side delivery or a bearish sentiment, I'm going to have the assumption that price is going to want to deliver higher to this resting short-term high and then eventually all-time highs, resting at about 21,350. So I sent this in my Discord yesterday, and I said, based off of the daily close today, it looks like price is priming for all-time highs draw and liquidity for NASDAQ. Looking for longs within this 4-hour bullish fair value gap seems to be the best scenario to capitalize on this move. The longs will be invalidated if we close below the 4-hour bullish fair value gap. That will be looking for an M15 market maker buy model tomorrow to hold to all-time highs. As you can see, I have the annotations drawn off. This 4-hour bullish fair value gap that's also in alignment with that down close candle that we labeled as a daily bullish order block. So here is that 4-hour chart, and I want you to mark off any extra annotations besides that 4-hour bullish fair value gap that I labeled that I want you guys to see as potential going into the trading day. And as you can see here, we also have an up close candle that is resting on the sell side of the curve. Up close candles on the sell side of the curve that were used as bearish order blocks can be used as mitigation blocks to expect to see PD arrays form inside of them. And as you can see, that 4-hour bullish fair value gap is resting roughly right inside of that mitigation block. So we're expecting price to trade down lower, tag that 4-hour bullish fair value gap, and then trade higher to that resting external range drawn liquidity. Now, it is NFP week. So we had an hourly bullish fair value gap that was aligned exactly with the 4-hour gap. So in my personal opinion, since it is NFP week and I want to be trading earlier in the week rather than later prior to NFP data release on Friday, I would rather be trading a lower time frame going from an hourly to an M5 compared to a 15-minute from a 4-hour gap tag so that I don't have to look for a bigger ranged point move, and the M5 can provide me a smaller ranged move, but I could still frame the same trade idea because there's both the 4-hour to the M15 and the 1-hour to the M5 within that 4-hour mitigation block. So this was my anticipation and my plan going into the trading day after we had our equities open, and we also had news at 10 o'clock. So that was also a liquidity and volatility injection in the marketplace that we could expect speed to take us to our drawn liquidity. Now, look at both the S&P 500 on the right and the NASDAQ on the left. For the forever model, whenever we're framing trades and we're building a narrative, what is our step 1 and our step 2? Step 1, we need price to tag a fair value gap. Step 2, we need SMT divergence to occur at or inside of the tag of that fair value gap. And you could see here, this corresponding low is the same as the S&P 500. NASDAQ tags the hourly bullish gap and the 4-hour gap, while the S&P 500 fails to tag it. Therefore, that's our SMT divergence that we needed, just like I have labeled here. Higher low on the S&P 500, lower low on the NASDAQ. So therefore we have step 1 and step 2 checked off on our list. All we need to do now is go to the aligned lower time frame and seek an execution and watch the reaction after price has tagged our higher time frame key level. So I was watching this on the hourly chart, so I'm going to go to the 5-minute and frame a 5-minute market maker buy model to the hourly external range draw up here. So here is the NASDAQ. As you can see, we have our hourly bullish fair value gap. We create SMT divergence. Now look at price within this little swing. As you can see, there's no down close candle that swept a short-term low. So use an alternate way of execution that I still do to this time. We had a M5 bullish breaker block that got created. We have an up close candle here, and we have a manipulation leg that sweeps a short-term low, tagging a higher time frame key level. That price then displaces higher and closes above that up close candle, confirming a M5 bullish breaker block. And when we saw that in the Discord while I was trading live, I said that I wanted to execute long at 21.171. My stop loss goes at the bottom of the breaker at 21.144.5, and my take profit was simply a 1 to 2 risk to reward at 21.223.25. All I did was put a buy limit at the tag of the breaker block, my stop loss in, and my take profit, and I let the trade ride. Price tagged me in on the next candle, and just like that, I was out of the trade within 30 minutes. And here is my executions, and this is me also managing the trade while it was actively reducing my risk as the trade was moving on. And I even reduced my risk before the 10 o'clock news. We reduced it from full risk to only 0.5%. So I was just making sure that everybody was protecting their capital and being safe. This was my execution with my take profit, all given to my Discord live in action. And if you do want to trade with me live, I will leave a link in the description of this video for you to come join the Forever Trading Lab. But like always, I hope you guys enjoyed this video, learned something from it, and I will catch you guys all next week in the next upload. Good luck, good trading.